The Sajjan Jindal-headed JSW Group is among India's largest business groups. Its listed companies together have a market cap of over 4.35 lakh crore, and they have proved to be decent wealth creators for their shareholders. Now, the listed basket of JSW Group is set to expand. JSW Cement, the parent of already listed Shiva Cement, has come up with an IPO. The company is raising 3600 crore. The IPO is open from 7th August, that is Thursday, to 11th August, that is Monday. Now, will JSW Cement create wealth for its shareholders like other JSW Group companies? Does it have a unique proposition, or is it just another humble addition in the already crowded cement space? Should you apply for this IPO? We will try to answer these questions in this video. Hello and welcome to ET Money's YouTube channel. In this video, we'll analyze JSW Cement's IPO in a 360-degree manner so that you can decide whether it deserves your money. Now, this video belongs to our IPO playlist. If you'd like to watch more such videos and understand companies deeply, you can explore it. The link is in the description. Okay, let's start with checking the key IPO details. The key details of the JSW Cement IPO are on your screen. The total issue size is 3600 crores, of which 1600 crores is a fresh issue and 2000 crore is an offer for sale or OFS. In a fresh issue, the company raises money through new shares, and in an OFS, existing shares are sold to the public by selling shareholders. The IPO opens on 7th August, Thursday, and closes on 11th August, Monday, as we saw at the start of this video. The lot size is 102 shares, so the minimum investment at the upper price band is about 15,000. The company's current share count is 125 crore shares. Post IPO, it will be 136 crore shares. The promoter holding will come down from the existing 79% to 72% post the IPO. The selling shareholders in the IPO include State Bank of India and private equity firm AP Asia Opportunistic Holding and Synergy Metals. Notably, promoters themselves are not taking part in the issue. Okay, let's next take a look at the company's business and industry. But before that, here's something important. You can now get cash to enjoy your present while staying invested for your future with loans against mutual funds on the ET Money app. The interest rate is just 10.75% per annum, and there is no fixed EMIs. Pay interest monthly and you pay the principal amount whenever it is convenient to you. Plus, there is no need for a CIBIL score. So go ahead, check your eligible limit on the ET Money app. And there is more. For the next 3 months, any withdrawal you do, you will get a special rate of 9.99% per annum. So go for it now. Alright, so what differentiates JSW Cement from its peers is its strong focus on green cementitious products, an environment-conscious approach, and reliance on green energy resources. Green cementitious products are manufactured by utilizing industry byproducts. They have a lower environmental impact compared to traditional cement types. In FY25, green cementitious products constituted 77% of the company's sales volumes and 70% of the revenues. With a market share of 84% in terms of sales, JSW Cement is India's largest manufacturer of ground granulated blast furnace slag, or GGBS. Now, GGBS is an eco-friendly strength-enhancing compound used in cement and concrete production. In FY25, it constituted 41% of company's sales volume. Now, on the operations front, the company boasts of the lowest carbon dioxide emission intensity among its peers in India and globally. In FY23, FY24 and FY25, the company's carbon dioxide emission intensity was approximately 62%, 51% and 52% lower than the peer average in India. Further, its carbon dioxide emission intensity in FY25 was 54% lower than that of top global cement companies in CY 2024. The company also claims to have increased the share of green power in its percentage of total power consumed. The company has the highest waste usage as a percentage of raw material among its peers. Now, apart from GGBS, JSW Cement's product portfolio consists of blended cement, ordinary Portland cement, clinker, and a range of other allied cementitious products such as ready-mix concrete, screened slag, concentration chemicals, and waterproofing compounds. The company is among the fastest growing cement companies in India, both in terms of capacity and sales volume growth over the last 10 years. It is also among the top 10 cement companies in India in both terms of installed capacity and sales volumes as of March 2025. Now, having started its operation in 2009 at Vijayanagar, Karnataka, the company has expanded across the country. It currently operates 7 plants, which comprise one integrated unit, one clinker unit, and 5 grinding units across the states of Andhra Pradesh, Karnataka, Tamil Nadu, Maharashtra, West Bengal, and Odisha. Its JV, JSW Cement FZC, operates one clinker unit in the UAE. Now, the company's current installed grinding capacity stands at 20.6 million metric tons per annum or MMTPA. Its installed clinker capacity stands at 6.44 MMTPA. Now, it plans to further increase its installed grinding capacity to 41.85 MMTPA and the installed clinker capacity to 13.04 MMTPA. Now, as of March 31st, 2025, the company had a network of about 4,600 dealers, 1,800 sub-dealers, and 158 warehouses. Now, the robust pan-India demand for cement and of GGBS is expected to benefit the company in the years to come. Next, let's take a look at the company's financials and valuations. Let's take a look at some of the key financials of JSW Cement first. At 5,900 crore, the company's revenue has decreased year on year and over the last 2 years. The company has also slid into losses in FY25. However, do know that the company's FY23 financials included the numbers of its then subsidiary JSW FZC. Now, JSW FZC was afterwards reclassified as a joint venture and the company stopped consolidating its numbers with its financials. Now, JSW FZC contributed about 18% of the operating revenues of JSW Cement in FY23 and caused a loss of about 49 crores. Now, without JSW FZC, the company's FY23 sales would have been lower but profits higher. Now, coming to the cash flows from operations, JSW Cement's cash flow from operations have risen over the last 2 years from 653 crores to 737 crore. On a year-on-year basis, they have fallen. At 2.6, the company has a high debt with respect to its equity. The company's EBITDA margin has averaged at 14.8% over the last 3 years. At 7.7%, its average ROCE is in single digits. Now, these frontline financial numbers don't excite much, but let's compare the company's industrial and financial metrics with those of its peers to get a better understanding. Now, in terms of total sales volume in FY25, JSW Cement is behind all its peers but India Cements. Same goes for its installed grinding capacity. Its market cap and revenue put it ahead of only India Cements. These metrics suggest that JSW Cement's operations and size are comparatively quite smaller as compared to its peers. Now, as we saw, the company's revenues have fallen over the last 2 years. A similar thing has happened with Ambuja Cements and India Cements. But companies like Ultratech and JK Cement have witnessed robust revenue growth during this period. JSW Cement is currently in loss and so is India Cements, but the rest of the peers are profitable. At 31% and 45% respectively, the PAT growth of Ambuja Cement and JK Cement stands out. Notably, all of JSW Cement's peers have low debt to equity ratios, with the only exception of JK Cement, whose debt to equity ratio is below 1 and is thus quite reasonable. Now, as compared to these debt to equity ratios, JSW Cements is quite alarming. In terms of its average EBITDA margins, the company is ahead of only Ramco Cements and India Cements. Finally, if we see the average ROCE, JSW Cement is ahead of Dalmia Bharat, Ramco Cements and India Cements. So all in all, the company's financials don't inspire much confidence versus peers, and the larger players in the sector exhibit better financial performance. But what about valuations? Well, in terms of price to book or the PB ratio, JSW Cement's PB of 8.45 is the highest among its peers. This suggests steep valuations. Now, since the cement industry is quite capital intensive and entails taking on substantial debt, another metric that we can check is EV to EBITDA ratio. Now, EV to EBITDA ratio is used to assess a company's valuations irrespective of its capital structure. EV stands for enterprise value. It's the theoretical cost of acquiring a company. It is derived by adding up the market cap and total debt and subtracting cash. Now, the EV to EBITDA ratio tells us how many times EBITDA investors are paying for the business's total value. The lower this number, the better. Now, if we compare JSW Cement's EV to EBITDA ratio with its peers at 29.7, it is the highest. So, in terms of PB and EV to EBITDA, JSW Cement is more expensive than its peers. Okay, next let's take a look at some key red flags in JSW Cement's IPO. But before that, here's something useful. You can access the detailed financial data of our listed companies such as balance sheet, the income statement, the cash flow statement, financial ratios, etc. on the ET Money app and website. So, if you're looking to research stocks, ET Money can be the one-stop solution for all your requirements. Do give it a try. In IPO investing, it isn't sufficient to evaluate the business and financials. One must also pay attention to certain IPO related metrics. We discussed them in our video analyzing IPOs, so you can go watch that video to learn more. Now in that video, you will also find 5 IPO hacks to increase your odds of success in IPO investing. So do watch it. As always, the link is in the description. Here we'll discuss the red flags in JSW Cement's IPO based on those metrics. First, more than half of the issue size is an offer for sale or OFS. This money won't go to the company but to the selling shareholders. Second, since the company is quite indebted, of the remaining 1600 crores, 520 crore will go towards repayment of borrowings. Third, there is outstanding litigation worth 134 crores against the company and about 40 crore against its subsidiaries. Any adverse developments on the litigation front can dent the company's profitability further. Fourth, the company has contingent liabilities worth over 111 crores. Now, contingent liability is a possible obligation that may or may not occur depending on the future event. So, low to nil contingent liabilities are desirable. Fifth, in the last 1 year, the selling shareholders acquired shares in the company at about half the IPO price. Now, given that the company made a loss in FY25, asking retail shareholders double the price seems unreasonable and opportunistic. Sixth, the liquidation of Bhushan Power and Steel, a group company as ordered by Supreme Court, can affect JSW Cement's expansion plans and financial conditions. However, the Supreme Court has stayed its own order for now. Okay, let's summarize the strengths and weaknesses of JSW Cement and its IPO in the concluding section of this video. Being part of the JSW Group, JSW Cement enjoys strong parentage and synergies with other group companies. Its focus on green products positions it as a futuristic company. Companies operating in green industries tend to enjoy premium valuations as compared to their traditional peers. The company has grown fast as far as its grinding capacity and sales volumes are concerned. It has aggressive plans as far as its future as well. But this rapid expansion has also come at a cost. JSW Cement has amassed massive debt, which is much higher than industry peers. Its financials don't excite much and the valuations appear to be stretched. Now, given this information, will you apply for this IPO? Do let us know in the comment section. And if you like this video, do share it with your friends and family. I will be back soon with another video. Till then, take care.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.